Hey, what's up? This is Sean Rampersad here with TMG, the Mortgage Group. Today I'm going to be talking to you about a fun topic. Not really, but it's called bridge loans. We're going to talk about bridge loans and who needs a bridge loan and when does that come into consideration when you're funding a mortgage. So first of all, what is bridge financing? Bridge financing is a sum of money lent by the bank to cover the interval between two transactions. So typically the buying of one house and the selling of another home. Okay. In simple terms, a bridge loan is used when you have a firm sale on a current property and then a firm purchase on a new property, and you need some money in between for the down payment on the new property. So normally what ends up happening in a bridge loan scenario is the current property that you own, you would have sold that. Let's say the possession date is on the 15th. And the new home that you're purchasing, the possession date may be on the 10th. So you won't get the money from the original house before you get the money on, like for the down payment on the new home. So there would be a 5-day bridge in between that time frame. Now bridges can be long. They could be 2 weeks, they could be a month, that type of thing. Because sometimes people want the possession date, or sellers want the possession date when they want it, or a buyer might want the possession date when they want it. So if you find yourself in this scenario, it's a bridge loan that you're going to be requesting. So who needs a bridge loan? Someone negotiating two deals, a sale and a purchase, and require the equity out of the sale to purchase the new property. The bridge loan will give them the flexibility to negotiate on both deals without an exact possession date. It's also great for people that want to slowly move into their new property without the rush of a specific date. So, elderly people, that type of thing, or people with anxiety, bridge loans are fantastic for them because they don't have to worry about, movers and doing everything in the same day. So the bank will lend you that money to close on the new purchase, essentially is what's going to happen. How long are bridge loans good for? Bridge loans are normally good for a few weeks to a few months. I have seen in a worst case scenario a bridge loan up to a year long. It's not normal, but I've seen that happen. How do bridge loans work in Canada? Bridge financing in Canada is not accepted by every financial institution, so be aware of that when you're dealing with a lender, or call me so I can help find you a lender that will allow for a bridge loan. Make sure you talk to us about that. It's huge, and don't assume. Some banks will charge for it, some won't. So most of the big banks like the Scotiabanks, TDs, that type of thing won't charge for a bridge loan, but it has to be done by the mortgage broker or advisor. What are the risks of a bridge loan? And there are some big risks, so I'm glad you're watching this video. The major risk is the buyer of the current property backs out and leaves you with both loans. So then you have payments on two properties. Now this cannot be used as a way to get two properties. I'm just warning you about that. The bank can call the loan and you will have to either sell really fast or they can force a sale. So just be careful with that. Is bridge financing good? Yeah, I think bridge financing is fantastic. I've used it myself in the past. It can help out a lot. There are some tiny risks to it. It's nothing huge to totally, make you not want to do a bridge loan. I think bridge loans are great for a lot of people in the right circumstances. But if you do have any questions about bridge loans, please call me anytime. My name is Sean Rampersad. I can be reached at 780-278-4847. All of my contact information is in the description below, along with some notes about bridge loans and credit and that type of thing. If you like the video, please like and subscribe to the channel. It helps me create more content, and I look forward to assisting you with your mortgage.